let's get started. So what we'll do is, in general, this is what your dashboard looks like when you arrive in PHI 1. From here, you can go into algos, you can go into options. So today we'll be talking about options. So let's go here. And now, in general, if you don't know about scenarios or if you don't know about option strategies in general, it's a bit of a mystery in terms of what to do next. Because there is a list here which you can load, but I mean, what to do when is the problem. So that's what we're tackling here today. So let's go to a completely different platform that does not belong to us at all. Let's just go to, let's say, TradingView. You can do similar things on multiple different platforms. So you can pick and choose your own. For today's example, we're just using TradingView. So what we'll do today is let's look at two instruments. Let's first look at Reliance, maybe. Yeah. And let's go into, we really like the precision of this view. So we'll just go into the technicals view of Reliance. Yeah. And as most of you would know, Reliance is in a pretty strong sell kind of a position. So now, assuming that this trend continues, right? What can we do to position ourselves for such a move? Or let's say, what are the kind of option strategies that you could deploy if your outlook was bearish, not only on Reliance, but on anything, right? So let's go back here. So the first one and the most simplest one that you can go and deploy is, of course, just a put, right? So a long put, which essentially, and let me just actually add it on my own instead of adding it from the list. So I select which strike. So the strike that I want to select is, I just want to buy the ATM put, right? So I select ATM, I select put, I select buy, I select the number of lots, and I just add one. So I've just right in front of you created a one-legged option strategy where we're basically just buying the put. Now, since we're taking into consideration where the at the money strike is, and all of the legs that we are basing the distance of the leg from the ATM. I can apply actually that strategy. I can apply it to any of the instruments on the FNO list, right? So applying it to Nifty, if you see, this is what your payoff would look like. So if Reliance, this is Nifty 50. Let me actually move it to Reliance because we were analyzing Reliance. And OPQR, right? It also opens the chain. Let me close it. So the spot is 2499.2. And just buying a put, right, has a break-even point of 2467. So if and also evidently from the chart, if Reliance ends up below 2467 at the expiry, you will end up making money, versus if it ends up expiring above 2467, then you'll lose money. But all the strategies that we will discuss today, and I highly, I would highly suggest, we're not in a position to recommend anything, but I'd highly suggest everyone to only limit themselves to, strategies on the option side where your risks are limited. So all the ones that we'll be talking about today have a capped loss. None of them have infinite loss. In general, I'd recommend, staying away from pure option selling. Okay, so moving forward from there. So this was the simplest strategy that we could think of to leverage our bearish outlook. Since we're bearish on Reliance, we just bought a put, right? That's the simplest thing that we could do. But let's make it slightly more complicated. Let's just refresh the page. And let's say I want to see what I can do if the instrument moves even slightly. Maybe I can do something there. because this was quite a bit away from the current price, right? The break even. So what I can do is there's a similar strategy. It's a put spread, and it's a variant of a put spread. It's called a bear put spread. So maybe I can use that. Essentially, what I'm doing is I'm selling two lots of ATM minus one, and I'm buying one lot at the ATM, right? So let's visualize this and let's select Reliance again. And once I do, I see the payoff. And I think we have, oh, sorry. Sorry. I am extremely sorry. I've selected a bear put ladder instead of a bear put spread. Let me actually select the right one. So now I am, yeah. So now I'm doing the same thing. Instead of two lots though, I'm selling one lot of call at the ATM minus one. So yeah, this is what the payoff would look like in this case. The break even in this case is 2493, which is very, very close to where my spot is. So even if it moves, like 6 points below, I'll end up making money, right? So if it, for example, if it expires to 437 or whatever, my profit is in front of me. Of course, if it goes against you, which means that if your original analysis was incorrect, you'll end up losing money, right? So that's the bit where we analyzed a bearish instrument, and we talked about two strategies which we could use to leverage our bearish outlook. We also want to talk about a few more. So there is something called a bull put ladder, right? Which you could also use in a bearish instrument. And let me actually go ahead and create a bull put ladder for you guys right in front of you. So a bull put ladder essentially is on the ATM. I'm buying a put, right? So I add that leg. I am buying one OTM put and I'm selling one ITM put. So basically, my puts would be in the money, right? If if the strike price is 75 and the underlying is valued at 72, 75 would be considered in the money, right? So essentially what I'm going to do is I'm going to sell one lot of ITM put, which means that I'll have to go above the ATM. So I'll go ATM plus 2 and I'll say instead of buying, I'm selling, and I'm selling one lot. So I add that leg, which is added. And then I also go out of the money put and I buy it. So out of the money is -3 and I'm buying, and let me add that leg. So now visualizing this, it essentially, if the option you've selected the right strikes, you will end up in a situation where you'll be very close to zero, might be mildly profitable or slightly in the loss when the instrument goes above your current spot price, but you'll make money if the instrument goes below the price that it is in currently. In this case, the break even is 2396. And as you can see, if it even does go against you, it's not very far from the zero line. It's slightly negative though, right? And as the profit is infinite depending on how low Reliance ends up expiring. So we talked about three strategies. One was a simple long put, one was a bear put spread, and the other one, the last one that we just talked about, is a bull put ladder, right? So now, for the sake of using a different scenario, let's talk about an instrument that is maybe doing slightly better and would be technically, at least, all the technicals are of course backward looking, but whatever your analysis is, let's assume that you are bearish. bullish on any of the instruments. So let's choose SIPLA in this case. Based on our analysis, it looks like it's doing well based on moving averages and oscillators. So let's try and apply something bullish to this. So of course, taking the same route, let me just refresh this so that everything's cleared out. Taking the same route, I can just buy an ATM call, right? And I can call it a day, right? And let's apply this to SIPLA, right? Now this is my payoff. So if SIPLA is SIPLA is currently 1043.5. If it ends up expiring above 1061, I'll end up making money. If it doesn't, I lose. Then taking it one step forward, maybe selecting a slightly more complicated strategy, I can select a bull put spread, right? A bull put spread is something like this, where actually, let's take another example. Let's take a long call butterfly, because I think this is one of the examples where you could apply this strategy not only to bullish, but you can also apply this to other scenarios. So if you think it's going to oscillate within a range, you can also apply this strategy. So this will be a slightly different, example for you guys. So if we apply this, we see that there's a major spike close to the current spot, right? So if this instrument ends up expiring close to the current ATM, right, which is 1043, or let's say 1040, right, we'll end up making money, and we do have our break evens right here. So if it goes above 1049 or goes below 1030, we lose money. So now the problem with this, of course, is that the net is not really wide. So it's a very narrow chance that an instrument ends up expiring between this tiny range. So how do we make it wider? So one of the things that we can do, of course, is go in and edit this strategy, where instead of buying the calls at -1 strike, we change this and we say that we want to buy this at, let's say, let's go -4 or -3, whatever suits your whatever you think is cheap, or whatever you think has the right delta for you. You can choose that. So I've just made it -4 and +4, and now as we can see, the net is quite wide. So if it ends up expiring between 1012 and 1067, right, and my assumption is that it will oscillate within a range around where it is, I'll end up profitable, and that's all that you're trying to do as a trader. So that's long call butterfly, and that's maybe one example also of how to change not only the strike but anything else that you want about the legs. So you can change the number of lots, you can change whether you're buying or you're selling, all of that, and this will immediately change your payoff as well, right? One more interesting thing is that this is not just a research tool. So you can, of course, you just click on place order, and if you have integrated your broker with PHI, you can just click and place this order right now. Okay. So all of the instruments, the expiry, the strike, the call or put, all of those ticker calculations have been done for you. The quantity is already in, and of course you can change it if you want, but you can just it's as simple as just clicking this place or all orders button, and this will place your orders in the brokerage of your choice. So that's the manual, placing of option positions based on our outlook. So we went bearish. We looked at a few different options of strategies that you could deploy when your outlook is bearish. Then we looked at a few different options when your outlook is bullish, including one that you could also use for oscillation type, scenarios where you think the instrument is going to be within a range. Um, Finally, I think just one last point to touch upon is volatile situations where you think there is going to be a huge move either on the upside or the downside, and you don't think the situation is going to stay as is, right? So that is where your straddles and your strangles will come in. So, for example, let me load in an example of that and give it time to update on the visualization. We just let it load once more. Let's just refresh the page once. And we want to load a straddle. Okay. And hopefully that, yes. So as you can see, we only make money when the move is large. If the instrument ends up expiring close to where it is currently, you'll end up losing money, right? There's tons of scope to optimize these strategies, of course, and we have the chain, which you can look at whenever you like, even whenever you'd like. So if you think there is a particular option that is cheaper, so if you think instead of buying the +1, I could maybe buy +2 or +3 because it looks cheap in the chain. Or similarly on the put side as well, if you think maybe ATM -3 is cheaper, you could just quickly select and change, right? And update the leg. And quite quickly, the payoff would change as well, right? So this is that's the optimization bit which you can go into. But as long as your break-even points are considered correctly, I think your probabilities can be taken care of quite effectively. And I think that's the major upside that we see with options, is that unlike algos where you need to do a lot of backtesting to understand what your probability is going to be like, here you're absolutely clear at what point will you end up making money and at what point will you end up losing money, right? The logical next step, because we also have algos, right? The logical next step could be that you were doing some sort of analysis here, right, which was based on moving averages and oscillators. So in this case, let's say you were looking at exponential moving averages of different types, Ichimoku, simple moving averages, right? Plus you're doing, let's say, stochastic, awesome, things like that. You could do similar things and you could program those in with our form-based builder as well. So when you go into create strategy, right, you can select your instrument. So you're looking at Reliance, so let's just select Reliance. And you could select an indicator. All of your usual SMAs, EMAs are all here, and you can select one. And let's say simple thing to do would be close greater than EMA, right? And let's select 200-day EMA just to be sure. And instead of just buying and selling the equity, I can select an option position that I had used earlier. So all of your ladders, spreads, butterflies, guts, they're all here, which you saw on the other page. So essentially now what the strategy would do is whenever the close goes above the 200-day SMA, you would deploy a long call butterfly. And you can add as many of these conditions as you want. In theory, you can build exactly the same thing that you have here, where you're using, whether the close is above the exponential moving average of 10, whether the close is above the exponential moving average of 20 and 200 and Ichimoku and all of that. And once all of these are true, right, you deploy a long call butterfly, or let's say a, a bear call ladder, something like that. So that's the bit that I wanted to cover in this webinar. But I am highly interested in trying to understand if there are any questions that we can answer, because I think that's going to be the key today.
Yeah, thanks, Aviral. There are a couple in the chat section. One is, can I create my own option strategies on this one?
Oh, yes, absolutely. So You can select whatever strike you want. I think I created a bull put ladder. Um, and I can basically say, as long as I know which strike and which instrument I'm buying or selling, right, I can put in as many legs as I want. So um so yeah, in short, you can essentially select the strategy that you want from the list that we already have pre-populated, or you can create one uh, on your own from scratch. So for example, let me just change this one, update this leg, and then save it. So this is how you create a strategy. You just enter a name. I'm saying ATM -1 -1 call, right? And yeah, it's saved successfully, and you will get it in the list as well. So yeah, I'm selling a call. I'm buying a call at the ATM -1. Anything? Any other questions, Deepak?
Yeah, there are a few more. One is, can you create the same for Bank Nifty?
Can I create the same? Yeah, absolutely. So let's take one of the strategies that we looked at today. Uh, okay, let's take bear put ladder, maybe, or let's take a different one. What's Bank Nifty like right now? Let's look at it. It's been range bound for a while, but off as of late, it's slightly trending upwards, maybe swooping down a little bit. Okay, so if my outlook is mildly bullish, um, let's see what all I could do. I could do a bull call spread, right? So let's see a bull call spread. Yeah. So if it and then let's apply it to, instead of Nifty 50, you wanted to apply it to Bank Nifty, right? Yeah. So current spot is 40776, and as long as it expires above 40840, I'll make money.
Yeah. So there is one more. You showcase selecting the different legs, +3, -3, +4.
Yeah.
So what do they mean? I mean, how do you use them?
Yeah. So that's where I slightly touched upon it when we were discussing editing strategies. So, in short, there is the shape of the payoff would remain the same, or at least similar, right? Even if I change, let's say, instead of buying the ATM+1 or selling the ATM+1 call, right? If I change it to ATM+3, right, and update the leg, the shape of the leg would remain the same, although the numbers would change, because now the premium would be different, right? That I'm gaining by selling this call. So the P&L numbers would be changing, but the shape would remain the same. The Greeks would be changing, and so on and so forth. And the other thing is, of course, which option is cheaper is also very, very relevant. So you can lower your costs for getting the same exact position. You can lower your cost dramatically by selecting the right options, selecting the right strikes in the option chain. So if you find that there is some if you're buying options, and if you find something cheaper, of course, buy the cheaper one. And I mean, and you can live see it as well on the payoff, that it would look dramatically different and more in your favor if you selected a cheaper option.
Go ahead. So there's one more, which is, can uh, can I can you showcase how we can paper trade a option strategy?
Can I? Yeah, sure. So let me go into Discover. Let me select something from the option side, right? Okay. So this is one strategy that is pre-created, right? Where we're taking a bear put spread based on a bearish crossover. So let's just edit this and see what it is first. Yeah. So as you can see, it's applied on Bank Nifty, and we're deploying a bear put spread when the triple EMA of 10 crosses above the triple EMA of 20, and the close is below the triple EMA of 30. So this is one of our discover strategies. And then if you want to paper trade, all that you need to do is click save and paper trade, and you will be taken to your paper trading screen. And when the market is active, it'll update with the numbers live.
There's one more. Can we add a stop loss or add more as the trade transaction continues?
So as that so in essence, right, when we're talking about options, you only place the trade once. So if we take, let's say, a ladder, any kind of ladder, um, this is a very bad example that I used because this is infinite loss. So let me actually use a different one. Which one did we just use? I forgot. Beer call spread, maybe. Let me use a beer call spread. Yeah, so it's updated now. So yeah, this is capped loss, which is good. Um, so the original question was, can I change the position? Absolutely, I can. So all the orders that are being placed here are actually just going into your regular brokerage account, right? So it's not like you can't go into your brokerage account and create another order. If you want, you can absolutely do that. Uh, if you want to change the position, what we'd highly actually recommend is that if you are profitable already on the position that you had, you close that position and create a new one from here, um, to add a leg, because at least you will know what the payoffs would be for the new position that you're creating. Uh, Otherwise, what will end up happening is that the premium would have changed from the time that you put that position in versus where the premium is now, right? Because there would have been some movement in the underlying, and therefore the premium of all the options would have changed, right? So I wouldn't recommend that you just add one more order to the current position unless you are completely sure of where the payoff is going. I wouldn't recommend doing that. To be clear and to remain consistent with the payoff that you saw on the chart, you should remove your current position and create a new one, ideally. But yeah, in terms of editing positions, from here, in the payoff side, you can absolutely do that. Once you have placed the order, we don't really control it too much. You can absolutely change your positions from the brokerage panel. But yeah, and we'd recommend that you remove that position or square off that position and come back here to take another one.
Also, can we put a stop loss too?
So on the option side, you don't really need a stop loss because your losses are capped as is, right? If you're using a limited risk strategy, that is, where you're not selling options more than you're buying, your losses would be capped. So if there is a different use case for the stop loss, please let me know. But as long as your use case is just to cap your loss, it's already done for you. It's a part of the strategy itself, part of the option position itself, to cap your loss. So yeah, not really required. Um, you can do that more on the algo side, where you have technicals where you're taking a entry position and you want to square off either on the stop loss or a different technical technical analysis indicator. um, yeah, so as I said, on the option side, I don't see much of a use case of stop losses. But in terms of editing the order, so you can, in theory, you can change market to, limit and stop loss market, or limit and stop loss, if you wanted to. So you can do that from here. But I don't know why you'd want to do that if your intention is just to preserve your overall um, payoff.
So another one is if you put, you know, use the algo feature, and do I get a notification if the conditions are met, or will it directly place the trade?
So both, depending on what you're doing. So if you're just doing a paper trade, it'll notify you. If you're deploying and you've integrated your brokerage account correctly, it'll place the trade, depending on, again, what you want to do.
Is it possible to create a super trend short strategy?
Is it possible to create a super trend short strategy? Yeah, absolutely. And I believe, if I'm not mistaken, it's already one of the strategies on the discover section. So yeah, it's not a short strategy; it's a long strategy. But yeah, you can do that. So maybe I can edit this one if I want to. So if it says I want to buy, if so, in essence, I change buy to sell. I say the close should be below the super trend, and I'll exit when the close goes above the super trend. So this will be a very simple, strategy that I can create, which is a short strategy on HDFC, LTI, and JSW Steel based on super trend. I can give it a name. So let's say bearish, maybe bearish super trend, and save and backtest. So once I do this, takes a few seconds, and hopefully it'll do a backtest and get back to you on what those numbers are. When you look at those numbers, of course, you can just click on deploy all, which will essentially, give you a whether an option whether you want to paper trade or you want to take it live.
So, is it compulsory to integrate the broker, or also how do you integrate a broker with the platform?
Okay, so let's go into that. So on the profile, which is on the top right, you go to your profile. Um, on the left hand panel, you have a button which says integrate broker accounts. We have a lot of integrations coming really, really shortly. But yeah, this is where you'll find the instructions for integrating with whichever broker you want. And you can just click on instructions, or you can just, integrate your broker from here.
How many,
There's, sorry, go on.
yeah, how many indicators are there in the app right now for creating strategies?
So, based on our last count, there were about 120 plus. Um, I don't know if I have the exact count, uh, but we have a collection of a lot of different indicators, both from, you have, of course, your usual super trend and EMAs and RSIs and ATRs and all of that, right? So you can select those. There are also candlestick related patterns that you can use. So, for example, there is Doji. There is You saw Donchin on the screen. There is something called Inside, right? Uh, so tons of these. Any of your favorite, indicators that you want to use, just try them out. Just try starting to enter the name. If you don't find it, uh, do get to just chat with us on this live chat tool, right? And we would likely be able to help you out by adding it very, very quickly. um, because yeah, I mean, I understand the frustration of not having your favorite indicator in there. So just talk to us. We'll quickly, we'll do our best to quickly add it uh, into the platform itself.
In your free trial plan, are there only limited set of indicators, or I can explore everything that is present in the platform?
So our free trial plan and our paid plan are indistinguishable. They're exactly the same. So you get everything that you get in the paid plan. You can test it out as if you have paid for it for 15 days, right? So you get exactly the same things as you would when you pay for it. There's absolutely no difference. Indicators, number of deployments, number of simulations, everything.
Last one, can you create strategies like crossover or cross down?
Yes, absolutely. So let me show you. So in the comparison operator, you can select cross up and cross down as well. So cross up is crossover and cross down is cross under, essentially.
So I think we have covered all the questions. Are there any questions which you think you need answers to? You can simply type them in the chat feature on Zoom and we'll answer it quickly. I think Aviral, we have covered pretty much everything.
Okay, and what we'll do is we'll just paste in the support email as well on the chat, so that everyone has it, right? Ismail is there. Ismail, by the way, is the person who answers the live chat as well. So, I mean, it's pretty much the same if you reach out to us on the live chat or on the email, but we'll give you both options. So you can do it from the live chat or you can do it from the support, email, which Ismail has already posted in the chat. Feel free to reach out to us in case of any questions. um, we're also doing demos. So you can schedule a demo with us just by going to 51.io and just clicking on the schedule a demo link. And you can just select a day and a time that is comfortable to you. And we'll reach out to you to confirm it and book it accordingly. I think that brings the session to a close. Thank you everyone so much for your time, for spending this good, a good 40-ish minutes with us to explore the interesting world of options, and hope to see you around. Thank you very much.